Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral and with me is Niraj. Good morning, Niraj. Clearly, the Bulls and the Bears are actually battling it out, at least in terms of yesterday's session as well, and support levels have started to move higher from here on.
Yeah, I mean, it was a day of heavyweight participation yesterday for sure, Hiral. Good morning, of course, to you and the viewers. It's great to be on the show, of course. But yeah, yesterday we saw banks, yesterday we saw Reliance do really well and take the markets up high. Some of it could also be attributed to delivery-based buying that could have happened in Reliance ahead of this big event today, which we'll talk about in just a moment. But the other aspect to look at it is that pockets which hold some promise and undervaluation stood firm as a rock in yesterday's session, particularly the PSU pack, right? Yesterday, till 2:30 when the rally had not even started, PSU stayed very steady, about 1% higher, 1.5% higher for the PSU bank index, for the PSU index as well, CPS ETF. So the going is good in certain pockets of the market, but one shouldn't not expect a corrective move at any point of time because we had such a splendid rally led by FIs, Hiral, that
And I think the other ones were supporting the markets. And if you see in terms of the FNO data as well, clearly you are seeing, positions that are being built at 20,000. And that probably is giving us an indication that at least by the end of this expiry, which is the July expiry, we could see markets come to that 20,000 level. And probably that's when we will see that kind of profit booking play in.
Yeah, so that could happen on the near-term trade. You would have analyzed it much better. But Hiral, the simple point is that it's still a rally of disbelief, right? People are still saying that, it's rallied so much, now maybe it will start correcting. People are not all in currently. So that is one aspect. And two, somehow, this whole equation around what Indian markets could do over the medium term has changed so dramatically that people are confident, let's put in the money to work. It may correct 5-7%, but we're looking at much higher levels. So for no harm, the near-term trade is separate. But the long-term trade, people are willing to put in money to work currently in expensive stocks as well, believing that the growth numbers will very likely be much, much better. So that's a bit of a support zone.
And plus the participation of Bank Nifty is going to be absolutely crucial from here on, as well as IT, because the kind of rally we've started to see in IT, how sustainable that is going to be and how much it will support markets is going to be important.
Yeah, and also keeping in mind the fact that one, we'll have Infi come out with numbers which will probably be better than what TCS, HCL Tech or Wipro have done. But is some of that in the price? Because a lot of traders that you and I have spoken to are already pre-positioned for good numbers on Infi. So could it be a case of sell-off if the numbers are not exactly up to the mark of expectations? But it's a busy day, busy next 2 days for IT. Infi, Emphasis, Persistent, a few others. So it could be interesting.
Right. And in today's session as well, Niraj, key is going to be yesterday, as you mentioned, we did see buying from the heavyweights, Reliance specifically, and an HDFC as well. The contribution was really strong. Now, in today's session, for Reliance, it's going to be interesting, right? Because people will actually start building positions on the FNO side, the ones who've already squared it off yesterday.
Yeah, that's the valid point, And I think Hiral, we'll get in Deven on this soon, but I think you nailed it on the head, right? Because people unraveled FNO, took cash because the contracts were expiring. 10 a.m. for the first time, we'll see Reliance FNO positions start trading at 10 instead of 9:15. So it's going to be an interesting day of trade for sure.
Absolutely. I think let's get in Deven Choksey as well to discuss more on this. Welcome to the show, Deven. My first question coming to you on this one is, now, as we know, it is the record date with regards to the demerger. Overall, how do you expect the price discovery and everything to pan out from here on? Your initial comments.
Good morning, Hiral. Good morning, Niraj. Well, I believe that the market is going to be smarter and it's going to price it well, I suppose. Let's look at some of the numbers which are possible as far as I think the pricing aspect is concerned. I'm not looking at, I think, how the Reliance Geo Financial Services going to be priced in the index at 100 rupees for the sake of calculation of index movement. But I'm also looking at the book value of the share, and I think the possible buying interest that Reliance Geo Financial Services may end up attracting. Along with the treasury stocks of Reliance Industry, and I think cash net worth that the company has, I think we are talking about somewhere around 140,000 crores worth of cash net worth in the books of Geo Financial Services. And even if we assume 1:1, or rather, I think one-time price to book ratio, then also I think we are talking about close to 150,000 crore worth of the number as far as I think the Geo Financial Services is concerned from the market cap point of view. deduct that market cap out of 19 lakh crore worth of market cap of combined Reliance of yesterday, I think that could possibly mean that Reliance Industry would assume the trading at around 17.5 lakh crore market cap, and Geo Financial Services would assume trading at around 1,50,000 crore market cap, which would translate to anywhere price of 150 or so, whatever it is, or 150 to 200 in between. Given the kind of, I think, discovery process, I think it could be anywhere between 150 to 200. My personal take would be that it would be closer to 200. That is where I probably, I think, would like to stand. Now, if given that kind of a situation, I think Geo Financial Services would probably be talked about much in detail hereafter from its business model point of view. And I would love to share my thoughts on that particular aspect as and when we talk in the show today.
In fact, Devin, kind of let's bring that in, right? Because for everybody who's trying to understand what to do with their holdings in Reliance, they will get 2 shares at 10. And while there is a constant price out there, there's a lot of reference, Devin, being made to what happened to Bajaj Finance when it split from the erstwhile Bajaj Group back then. Who knew it will become the behemoth that it has become? Now, it will be wrong to compare and say that Reliance will do the same, but I'm just trying to understand, how do you think people should approach both of these entities as and when they have the option to get out of both? Should they stick on? Should they book profits? Or should they stick on for the really long term? And why?
Fair question, Neeraj. And let me explain, I think, what exactly my thought process on the subject and analysis on the subject is. The Geo Financial Services is starting with a very, very strong possibility of having the customer in its fold. Because in Reliance Retail, you already have the customers coming through the physical stores, which are 18,000 plus. They also come to Reliance Retail's e-commerce platforms like AGO as well as GeoMart. And that is where, again, I think the omni-channel presence is being created for the customer. At the same time, I think those customers are also included B2B customers, those Kirana stores, those Sakari Bandars, which are already part of Reliance Retail's grocery business. They are also part of this particular platform. So I think very good proposition to start with for an NBFC company, that they have customers in place for them. Along with that, you have Geo platform, in which you have got the mobile customer, enterprise customers, the home customers. All these customers are there, and Geo platform is basically offering all the commercial services at the same time. So there is a bunch of customer available, and that's not a small number. I think you can track around 44, 45 uh, crores customers. I think which physically, I think we are talking about. So from a perspective of looking at the customer base, including in money control, which is a site, I think, where you have got the maximum number of customers available, subscribers available onto the platform for financial products and services. If all of them combine together and put across, I think, the respective business proposition of funding these customers, either Kirana stores on a B2B basis or retail customers on a B2C basis, I think what we are talking about is a sizably large addressable market that we are talking about. Now compare it with, I think, what Bajaj Finance have done in last 15 years or so. I think that would be something which will give an indication of what Geo Financial Services could do. Bajaj Finance, as on today, after 15 years, I think is a net worth of around 45,000 crores. Geo Financial Services is starting with a net worth of 150,000 crores. On the other side, Bajaj Finance AUM book is 2,80,000 crores. Geo Finance Services, given the kind of lending ability that they would have and given the kind of prospect that they would have, they start with an assumption of, I think, lending book of around 7.5 lakh crores. Now, all these possibilities are going to materialize, provided, I think, they have the organization in place where you have the technology in the front and people at the back to deliver the entire services. In my viewpoint, I think Geo platforms has a technological advantage too, wherein I think they could distribute the financial product and services on all these customers, given the kind of strength that they have. Money is not a constraint given the size of the balance sheet that they have. So if all ingredients are in place, Geo Financial Services could be, I think, who knows, I think, what many number of times multi-bagger opportunity it is. But my take would be that in next 3 to 5 years, suppose if the loan book is between 7.5 lakh crore or 10 lakh crore, then in such situation, we are talking about, I think, 8 to 10% NIM on a conservative side because of the subvention pricing mechanism that they would follow. I would think that, I think, they would assume a significantly large amount of market capitalization going forward. And that is where I believe that I think it could be a multi-bagger. I would not be surprised if it is, I think, 5 times from current levels, I think, of the listing. So let's wait and see how exactly it pans out. Nothing is happening tomorrow. As I said, business will have to travel, I think, over next 3 to 5 years. But this is a possibility on which they are working.
Right. I think, Deven, I was going to take the next question with you on valuations, but you've clearly summed it up really well. 5 times is the kind of opportunity what we're looking at. So thank you so much for joining us on the show and sharing those views as well. Niraj, clearly, from what Deven was mentioning as well. And as, we already have Sajid who's standing by, but Sajid just was offline telling us right now as to what had happened in 2005, which was the previous demerger, right? Welcome, Sajid. And
Welcome.
if you could just
Thank you very much.
refresh our memory in terms of the 2005 demerger and how was value unlocking actually
So
happening?
that was as a result of the group split that happened, right? 4 companies got split from Reliance Industries, and there was a similar pre-open session which happened at that time, and value was assigned to the 4 subsidiaries of Reliance Industries, which eventually went to the Anil Dhirubhai Ambani group, which there. And post that, Reliance gave a decent amount of returns. It went up by nearly 36% after that. And we're going to see something similar here also, but what we're going to see here is a fintech arm which is going to get demerged, and eventual value accretion to the shareholders, which includes the promoter shareholders as well, because it's a vertical split which is coming in Reliance Industries, and that would be something to watch out for. So even if you assume that it's going to be around 180 to 200 rupees a share based on the discount price which comes in today, we're looking at 120 to 130,000 crores, which of $15 billion valuation coming for JFS on day one, which is going to happen.
Okay, Sajid, very quickly, 30 seconds. What is it that you've gleaned the best out of the various conversations that you would have had around this exercise, and what could happen ahead?
So it's a business.
30 seconds.
It's a business which already has a good amount of treasury stocks to capitalize. Fintech will take a lot of capital. That capital will come in through the treasury stock, and that will be monetized to get. So it doesn't need fresh investment unless Reliance decides or JFS decides, because Reliance will not have any stake in JFS unless Mukesh Ambani decides that he wants to get a strategic investor.
Got it. Okay, interesting. Now, Sajid, the other big thing aside of Reliance, there's a market beyond Reliance.
Yes.
It's a
result
heavy day. Yeah. So HUL, let's talk about it.
Oh, okay. So interesting coming up from there, good volume growth coming in, 8 to 9% of volume growth, led by the home and personal care segment for HUL, which will eventually translate into nearly 15 to 16% growth in net profit in Q1 for them. What is important to look at is primarily some of the drivers which have been pushing volume growth, which is home and personal care, and impact of the raw material prices. Prices have fallen, and but that impact may not be seen in the P&L, because they may have compensated with higher spends, marketing spends, because you are seeing some of the segments, food and beverage segment, where the growth is very sluggish, 5 to 6% growth. Dabur came out with a similar kind of commentary saying that F&B growth will be muted 5 to 6% as compared to HPC, which will be near double-digit growth coming in for HUL. So that's something which we need to watch out for, and also the kind of margin picture which will come in. They've been looking at margin, and but will they be able to get market share? Because we've seen a trend now that the bigger players are not reducing the prices much, and that's leading to comeback of an unorganized sector which is coming in, eating into their market. So we're going to see that kind of commentary also.
But the most important number is the margin.
Margin would be one, and whether they want to bring down the prices, because they've not been able. Top players haven't brought down the prices so much, because even though raw material prices have fallen from the peak, they're still ahead, higher than last year.
Never happens, Sajid. The prices gone up, they never come down.
If they don't come down, they lose the market share. That's the thing.
Yeah, and I think we've been talking about a price war in FMCG, and plus there's a change of guard as well at FMCG, right? With Rohit Java coming in. So what his strategy is going to be important from here on as well.
Should be interesting. Sajid, thanks for that.
Thank you.
Absolutely. Apart from this, another Infosys is another one, Niraj, which will be reporting numbers today. An interesting trend that I've seen in this quarter is a lot of these companies have actually announced a lot of deal wins just before the earnings, which usually has never been the trend, right? So that's going to be an aspect we need to watch out for. In fact, Tushar is standing by with more details. Good morning, Tushar.
You just replace Sajid. Okay, now tell us, replace HUL with Infosys.
So, Infosys, if you remember, Q4 was a shocker. If a shocker worse than that, it was a howler. So, what the commentary at that point of time, what analysts said at that point of time, what it will have a dampening effect in all of FY24, and a recovery is likely only in FY25. We have the Bloomberg estimates right now. Results are if Bloomberg is estimates are anything to go by, we are looking at a 5% revenue growth in FY24 now. So essentially, if that happens, that will only be possible if the deal making comes in as what Hiral said right now. So if the deal making does not happen, then the 5% guidance will also be at risk right now.
Okay. Yeah. So you're watching out for the guidance numbers as the most important thing?
The most important thing right now would be the guidance numbers, what Infosys says right now. Especially
and what's that number? They need to guide to what number?
So they guided at the end of Q4 at 4 to 7%.
Okay.
What Bloomberg Intelligence says, it should be around 5%. That also contingent on the fact that Infosys has stellar deal making in the first quarter.
Okay.
That's what they are guiding.
So that's what's to be watched out for. Okay, great. Now, anything else on Infosys, or should we move to Tatacom?
Let's move to Tatacom.
Okay, Tatacom. So, what did you make of the numbers?
Tatacom, we see that the profit is down 30%. That's mostly due to the higher interest costs and lower forex gains that they had. The digital portfolio, however, is up 37% odd or something. The digital revenue is also about 35%. So there's a plus there. Overall revenue is about 11% up. The digital portfolio has gained a lot from the integration of the past acquisition of a company called The Switch. During the quarter, they also made another acquisition of Caleria for $100 million. That should also start paying off. The CEO so far has said that they are on track or on its execution strategy. There's a transformation that they are undergoing right now. So they are guiding for a better future. Let's see how the rest of the fiscal pans out.
Thanks, Tushar, for getting us the details. In fact, Niraj will be speaking to the management as well this morning. So I think you'll be able to catch up a lot of points in terms of what's worked and what's not worked. But apart from Tata Communication, a lot of other smaller companies that have reported numbers. Imanj, a quick one in terms of which are the numbers you've tracked and what are the key takeaways?
Right. A bunch of earnings were in focus yesterday. Starting off with Hudson Agro. The revenues were up by about 7% on a year-on-year basis and stood at roughly 2,150 crores. The net profit also surged by 54% on a year-on-year basis and stood at 80 odd crores. This was backed by the margin improving from 8.84% to 11.06% now. Moving on to L&T Finance, which reported some encouraging numbers. The net profit doubled up to approximately 530 odd crores on the back of strong growth in rural group and microfinance loans. And credit cost also reduced sharply by approximately 40% over the previous year. Net interest margin also improved by roughly 152 basis points and now stands at 8.06%. The company is ahead of its target for set out in Lakshya 2026, where they aim on complete retailization. Their retail book grew at 34% on a year-on-year basis, whereas their wholesale book noted a reduction of 65%. And the overall mix also stands at 82 and 18% respectively. Coming on to Canfin Homes, their interest income was up 35 odd percent and their net profits were up by roughly 13%. And they continue to maintain 73% of their loan book for salaried professionals. And housing forms 89% of the loan book, which reflects a strong demand post-COVID for housing loans. As per brokerages, Jefferies maintains a buy rating with a target price of 850, whereas Morgan Stanley remains equal weight on the company with a target price of 640. Then moving on to Finolex Industries, their revenues were down 1% due to corrections in PVC prices since July 2022. But PVC pipes and fitting volumes registered a growth of 28%, while there was a 27% decrease noted in PVC resin volumes, and which now stand at roughly 46,000 megatons. And these were summarization of all the earnings, and that's a wrap from my side.
Thanks, Demerge, for that. So a lot of interesting earnings to watch out for. Hudson Agro seem very, very interesting. So let's see if that stock reacts this morning. Now, a couple of pharma stocks in focus today. One of them is Dr. Reddy's. The other one is Sun Pharma. Monal is standing by to tell us why are these stocks in focus. Monal, good morning.
Good morning, Niraj. Yeah, so Sun Pharma has been in focus. I mean, it's actually announced a deal. Okay, so it had its entire subsidiary, the US based subsidiary, and it had proposed that it's going to acquire shares for $38 in Taro. Now, Kren Savage Asset Management, which is the largest minority shareholder of the company, has come out with a very savage statement, so to say, very true to its name. It said that the offer is paltry, and that Sun Pharma is ignoring the control premium that it's supposed to give to Taro. It also said that it's ignoring the 22 tentative approvals that the 22 generic drug approvals that are pending in the US, including 4 tentative ones. It said that the offer of $38 per share is pretty inadequate, and that is at a discount of 17% to the value of its tangible assets, like Taro's tangible assets. So if the company were to be liquidated, the shareholders would still get $45 per share. So that's a very, very strong allegation there. And it said that this is a repeat history because in 2011, also Sun had made a very low offer, post which the offer was rejected by the minority shareholders and it had offered a premium of 60%. So now it is saying that it's barely offering $16 million for over and above the Taro's cash balance for the remaining 81 lakh shares that it's planning to acquire in Taro. So let's see what happens. Analysts were very, very positive when the initial announcement was made. But now if the offer were to change and modify, we need to wait and watch on how this is going to impact Sun Pharma.
Right.
That's one. Now, moving on to Dr. Reddy's. So Dr. Reddy's API manufacturing facility at Srikakulam yesterday, the company came out with a statement and said that no action was indicated and no observations were made. Now, this inspection took place between July 10 to 19. It's a positive because it was a pre-approval inspection, so there may be some pending products from the facility that are awaiting approval, so that should be a clear. Also, it was a routine good manufacturing practices checkup, so this clearance of the plant is a positive, absolutely. Also, this kind of indicates a trend that the US FDA, of course, has increased a lot of inspections in India, and last year we'd seen a very high incidence of observations that were coming in. But this year we're seeing a lot of positives with voluntary action, no action. It's a great thing. It's a sign that we're heading in the right direction.
Right. Thanks, Monal, for getting us the details. So 2 stocks, one could see a positive reaction, one could see a negative reaction in trade. So let's see how the markets take the news so far. But moving on, the metal industry is going to be in focus, especially the aluminium players. Rishi standing by. Rishi, good morning. Alcoa has reported numbers, and that usually sets the trend in terms of what could be expected for the Indian players as well, right?
Yeah, so Alcoa reported its second quarter numbers, and it reported an earnings of $137 million, and it missed the estimates of $158 million. Its sales also fell by 26% year on year to $2.68 billion. Now, globally, market participants generally look at Alcoa to get an indication how the metals market will perform, and this earnings miss will likely set a trend for Indian companies, which includes Hindalco, Vedanta, as well as Nalco as well.
Right. So that's with regards to, metal players will be in focus, but an interesting one, Niraj, to catch is MK report on Maruti. They have a target price of 11,000 already, which is the new milestone. What is it that they're betting big on, Rishi?
So MK was basically clarifying on the fact that basically the Maruti Suzuki stock has underperformed the auto index by about 8% in the 2023. So it was just clarifying on various investor concerns. So firstly, investors were concerned about whether or not the new products had an adequate demand. Now, MK's checks suggested that there was actually a strong demand, especially for the recent SUV launches, including Jimny, as well as for the most recent Invictor launches. The SUVs are actually facing a waitlist in the range of 30 lakhs to over 1 crores, despite the company also reporting very high volumes. Now, the domestic market share of the company is expected to rise to 45% by FY25 compared to the current 41.4% in FY23.
Right.
Now, as against the general perception of it being being a laggard in the EV space, it is planning to introduce a completely grounds up pure EV from October 2024. So that's something to look out for as well.
Okay, thanks for that, Rishi. We'll watch out for these as well. Now, the other thing is we already know about the key large newsmakers of the day today and some of the results that are to be anticipated. So we already know about those pockets. The key to figure out is now, what about some of the other smaller stocks which might be in news and might have a bit of a reaction. So let's get in Varsha on that. Varsha, good morning.
Good morning. So there are many stocks that one needs to watch out. So the first one we have is Mastech. So the company signed agreement to acquire Biz Analytica for an upfront payment of rupees almost 137 crore, and this is to boost its generative AI and data and cloud capabilities. The next company that we have is LIC. Satpal Bhanu, an additional zonal manager at Zonal Office LIC of India, Bhopal, has been appointed as Managing Director of LIC India. The next company that we have is Electra Green Tech, an electric bus manufacturer which has awarded 395 crore contract to Megha Engineering and Infrastructure to construct a greenfield electric vehicle manufacturing facility at Sitarampur, Hyderabad. Now, note the Megha Engineering and Infrastructure is actually the ultimate holding company and related party to Electra. The next company that we have is Federal Bank. The bank launched an QIP and fixed the floor price at rupees 132 per share. Now the floor price is actually a discount of 2% as against the current market price. Then the next company that we have is Transformers and Rectifiers. So Gujarat Energy Transmission Corporation has decided to stop dealing with transformers and rectifiers for a period of 3 years. Now why? The stop deal notice is on the ground that the company has submitted and forged material dispatch clearance certificate for certain transformers supplied. The last company that we have is Shree Cement. Now, the company has received an inspection notice from the Ministry of Corporate Affairs under Section 206, subsection 5 of the Companies Act 2013. Now, the above section states that the central government may direct inspection of books and papers of a company by an inspector appointed by it for the purpose. Now, note that in June 2023, there was this report on tax evasion of almost 23,000 crore by this company.
Yeah, well, yesterday Hero had a similar notice. The stock didn't budge. So let's see if Shree Cement does that. Thanks for that, Varsha. So lots of stocks in news, lots of stocks which might have actually a negative impact as well, Hiral. There is Transformers and Rectifiers, Krishna Diagnostics, Shree Cement.
Shree Cement, yes.
Sun Pharma maybe because of the
negative news on the taro part of it as well.
So lots of things to monitor.
Absolutely. And I think we're just in time with regards to Reliance's pre-open. So please stay tuned to BQ Prime to understand what's happening with Reliance Industries from here on. And the length of the show clearly tells you how busy the day is going to be for all of us here at BQ Prime. That's all that we have in this session. Thanks for watching. Lots more lined up on the other side. Please stay tuned. And that's a wrap from Niraj and myself.